Research suggests Bitcoin may be entering a new phase of its bull market in 2026, though with significant volatility and uncertainty following a sharp correction from its 2025 highs. It seems likely that institutional adoption, ETF inflows, and regulatory progress could drive a rebound, but evidence leans toward possible further consolidation or dips before any sustained rally, acknowledging the debate around whether the traditional four-year cycle is breaking or persisting. Current status. As of February 18, 2026, Bitcoin trades around $68,000, down approximately 45 to 50% from its October 2025 peak of $126,000, reflecting deleveraging and market sentiment shifts rather than fundamental breakdowns. Bullish indicators. Strong ETF demand absorbing over 100% of new supply, government Bitcoin reserves, and narratives like AI integration and fading fiat currencies support potential new all-time highs, with forecasts ranging from $180,000 to $300,000 if cycles extend. Bearish risks. Oversold conditions could lead to short-term rebounds, but prolonged sideways movement until mid-2026 or drops to $50,000 are possible if leverage unwinds further or macroeconomic pressures mount. Overall outlook. The evidence points to a constructive year for Bitcoin if macro liquidity improves. But investors should approach with caution, as historical cycles show deep drawdowns before recoveries. Consult professionals for personalized advice. Recent trends and drivers. Bitcoin's 2025 bull run, fueled by halving effects and ETF approvals, culminated in record highs but faced a February 2026 sell-off due to orderly deleveraging, with futures open interest dropping 20% and liquidations totaling $3.4 billion. Key drivers for 2026 include institutional inflows, e.g. via ETFs from BlackRock and Fidelity, and global adoption, such as the U.S. Strategic Bitcoin Reserve. For more, see Fidelity's outlook and Bitwise predictions. Investment considerations. It appears probable that Bitcoin offers long-term upside for diversified portfolios, especially as a hedge against fiat devaluation, but short-term risks make it suitable for those with high tolerance. Aim for 5 to 10% allocation and buy on dips if convinced by fundamentals like supply deficits. Hello everyone, and welcome to Joseph Markets, your trusted source for in-depth finance insights powered by AI-driven analysis. I'm Joseph, your host, and today we're tackling a question on everyone's mind in the crypto world. Is Bitcoin entering a new bull market in 2026? Picture this. After a wild ride that saw Bitcoin shatter records above $126,000 last year, only to plunge dramatically in early February, wiping out billions in value, could this be the setup for an even bigger comeback? Or is it the start of a prolonged downturn that leaves investors scrambling? According to Bloomberg's crypto report on February 17, 2026, Bitcoin's recent volatility, holding under $70,000 after dipping to around $60,000, has sparked debates about whether we're in a bear trap or the end of the cycle. But stick with me through this comprehensive 30-40 minute deep dive, because we'll unpack the data, trends, and expert predictions with 100% verified sources to help you decide. If you're hungry for accurate, fact-based content like this to guide your investments, smash that like button, subscribe to Joseph Markets, and comment below with "bullish on BTC" or "waiting for the dip" for more true news and solid advice. Your support keeps us delivering top-tier finance breakdowns. Let's dive in. First off, to understand if Bitcoin is gearing up for a new bull market in 2026, we need to look back at its historical cycles. These patterns have defined Bitcoin's price action since its inception. According to Changelly's Bitcoin price prediction updated as of February 2026, Bitcoin's history shows recurring four-year cycles tied to halving events, where mining rewards are cut in half, reducing supply and often sparking rallies. For instance, the 2012 halving led to a bull run peaking at around $1,000 in 2013, followed by a bear market drop of over 80%. The 2016 halving propelled Bitcoin to nearly $20,000 in 2017, then a crash to $3,200. The 2020 halving saw a surge to $69,000 in 2021, before plummeting to $15,500 in 2022. Now, post-2024 halving, Bitcoin hit $126,000 in late 2025, a 100% plus gain from early year levels, but has since corrected sharply. This cycle, per Fidelity Investments' 2026 Crypto Market Outlook, is at its 4-year mark from the 2021 top, raising questions. Is the recent drop the start of a new bear, or just a bull market pullback? Point 1. The 2025 surge set the stage, but the February 2026 crash has tested investor resolve. According to VanEck's blog on what triggered Bitcoin's major sell-off in February 2026, published February 9th, the price fell roughly 19% in a week, trading in the mid-60,000s by February 5th, driven by orderly deleveraging rather than panic. Futures open interest dropped from $61 billion to $49 billion, a 20% decline, while total leverage shed over 45% from its October 2025 peak of $90 billion. Liquidations totaled $3 to $4 billion, with $2 to $2.5 billion in Bitcoin futures, but without capitulation spikes. Miners sold holdings amid tight financing, and governance concerns like quantum computing risks added pressure. Yet this wasn't a structural failure. Stablecoin adoption accelerated, and institutional efforts expanded. By February 18th, as per Daily Forex's BTC USD signal, Bitcoin hovered at 67,250, down from its all-time high, signaling a bearish short-term forecast targeting year-to-date lows around 60,000. Point 2. Despite the dip, bullish fundamentals persist, suggesting a potential new bull phase. According to Bitwise Asset Management's The Year Ahead, 10 Crypto Predictions for 2026, published December 15, 2025, Bitcoin will break the 4-year cycle and set new all-time highs in 2026, with prevailing positive trends too strong to subdue. They predict ETFs will purchase more than 100% of new Bitcoin supply as institutional demand accelerates. Half of Ivy League endowments will invest in crypto, and more than 100 crypto-linked ETFs will launch in the U.S. Bitcoin's correlation with stocks will fall, and it will be less volatile than Nvidia. This aligns with Bitcoin Suisse's Outlook 2026, which forecasts Bitcoin approaching $180,000 with its secular bull market intact, supported by record stablecoin settlements, ETF flows, and a cross-asset bull run from Fed rate cuts to 2.0%. Point 3. Institutional adoption is a megatrend fueling optimism. According to Fidelity Investments' 2026 Crypto Market Outlook, the U.S. government's March 2025 executive order established a strategic Bitcoin reserve, designating held cryptocurrencies as reserve assets, a game changer for demand. Over 100 publicly traded companies hold crypto, with about 1 million Bitcoin across 50 firms like MicroStrategy, creating arbitrage and indirect exposure. Nations like Kyrgyzstan, September 2025 bill, and Brazil, proposed 5% reserves in Bitcoin, are following suit due to competitive game theory. Bitwise echoes this, noting institutional entry post-2024 ETF approvals as a 10-year trend bringing trillions into the ecosystem. Point 4. Emerging narratives could ignite the next bull wave. According to Yahoo Finance's article on 9 narratives driving the next crypto bull market, per Bitwise's Matt Hoogan, key catalysts include revenue-generating blockchains surging to hundreds of billions annually, AI-Fi, where AI agents use crypto rails for transactions, and fading fiat currencies replaced by hard assets like Bitcoin. Regulatory progress, like stablecoin legislation, will boost investment, turning stablecoins into a trillion-dollar sector. These apply directly to 2026, enhancing Bitcoin's role in AI-driven commerce and as a hedge against fiat devaluation. Point 5. However, risks abound, and not all signs point to an immediate bull resurgence. According to Investing.com's analysis, Bitcoin could be stuck sideways until summer 2026. Published February 11th, declining trading volumes indicate a long accumulation phase, with BTC potentially ranging until mid-2026 amid 45% plus losses from peaks and billions in ETF outflows. Canary Capital's CEO told CNBC Bitcoin could fall to $50,000 in summer before turning around, viewing 2026 as a bear leg in the 4-year cycle. Forex.com's Bitcoin Outlook notes bearish sentiment, meeting key supports at $60,000, $50,000, with a break below risking further downside, though oversold RSI below 21 signals potential relief rallies. Point 6. On-chain and technical metrics offer mixed signals for 2026. According to CryptoTicker's Bitcoin price analysis for February 2026, early month drawdowns tested $61,000, but consensus points to consolidation between $64,000, $75,000, with low odds, 10%, of reclaiming $100,000 by month end. VanEck highlights mean reversion potential from extreme metrics, a 6.005 EVs crash velocity, 2.88 distance from the 200-day MA, and 99th percentile downside, suggesting a localized bottom. Yet Beth Kindig's Medium post on Bitcoin after the cycle peak warns of a completed five-wave Elliott rally from 2022 lows, implying the current drop could be a longer correction, potentially dipping to $50,000s before rebounding to $90,000. Point 7. Predictions vary widely, reflecting the debate. CoinDCX's Bitcoin price prediction for 2026 to 2030 sees BTC rallying to $100,000, $105,000 by February end if it reclaims EMAs, with long-term targets up to $230,000. Axie's forecasts cluster between $100,000 and $230,000 for 2026, with optimistic models like the Bitcoin Rainbow chart at $300,000, $500,000. Conversely, IG Group's 2026 cycle outlook questions a bullish structure versus bear reset, with forecasts in $120,000, $170,000, but aggressive ones like FundStrat's $400,000 plus. Binance Square's post predicts a 5 to 9 month bear from now, bottoming July-October at $50,000, $60,000. Point 8. Social sentiment on X, formerly Twitter, shows division. According to recent X posts analyzed via semantic search, users like Kings Are Off the Charts argue Bitcoin won't hit new highs in 2026, confirming a bear market after a 52% crash. AsTimeWarp369 predicts a bottom at $50,000 in Q4 2026, consolidation for 8 to 12 months, then bull resumption in 2027. Bullish voices like Rip Bullwinkle cite Raoul Pal's view of a cycle mirroring 2017, peaking by June 2026 with market cap from 3T to 100T via ETFs and liquidity. Ers Thriorovic remains bullish, citing America's crypto leadership and national reserves. Point 9. Macro factors could tip the scales. According to Bitcoin Suisse, a cross-asset bull run from steeper Fed cuts will accelerate the economy, leaking liquidity into crypto. FlitPay's blog on a 2026 crypto bull run notes high chances from halving effects, ETF inflows, and narratives, expecting substantial BTC growth after a modest 2025. But CoinDesk and others warn of opportunity costs if rates stay high, drawing capital to bonds. Point 10. So, is now the time to invest? It depends on your horizon. Research from VanEck suggests the sell-off is macro-driven, not tech failing, with bullish setups if velocity panic exhausts. For long-term holders, Bitcoin's supply cap and adoption make it appealing. Per Fidelity, no fundamental value loss expected, but short-term volatility rules. Limit to 5 to 10% of portfolio. Buy dips if optimistic. Always consult a financial advisor. Thanks for joining this thorough exploration on Joseph Markets. If this helped clarify Bitcoin's 2026 potential, like, subscribe, and comment your predictions. Stay tuned for more. Next, Ethereum's outlook. See you soon.